Good morning guys! Today, we're going to discuss easy way to understand income and business taxation on income tax. So it's Module 5, Income Tax. So what is income tax? Income tax is mostly applicable to a corporation. A corporation can be a product, goods, or service business. So income tax from business vary depending on the kind of business operation. And businesses can be a sole proprietorship, a merchandising or service, a partnership or a corporation, merchandising, service, or manufacturing. A tax computation vary depending on the kind of ownership. So if it is under sole proprietorship, tax computation will be based on individual tax. If it is under professional partnership, tax computation will be 8% outright tax if it is a general partnership. Then, income will be divided to each partner and tax computation will be based on individual tax or outright tax, whichever is lower. A corporation, whether big or small, are subject to corporate income tax. A business can use actual expenses of the company or 40% absolute outright expenses. If ever there is a corporate net loss, companies still need to pay tax under MCIT. Payment of corporate income tax is on quarterly basis. We use 30% tax rate for the corporate tax, while individual tax is on 1700 tax table. A business can be simply merchandising, a manufacturing or service business. If the business is product or goods, then you need to deduct first the cost of sales to get the gross profit. Afterwards, all operating expenses, selling, and administrative expense are deducted to get the operating income. So your operating income is the basis to get the income tax of the corporation. Tax percentage will be 30%. So whether you like it or not, you need to pay the income tax of your business. So any tax that you forget to pay unconsciously will be called as tax avoidance. So if you intentionally not pay the tax, then this tax is called tax evasion. You as an accountant and the signatory of the business, your boss, will be charged as tax evader. So let's try to compute. So we have 4 examples. So let's start with example number 1. So the requirements here is to compute the income tax, the net income, and the MCIT. So sales is 1,200,000. Cost of sale is 345,000. The expenses is 123,000. So the business is a sole proprietorship. So with the sole proprietorship, we're going to use the tax table. Okay. So we have sales of 1,200,000 less the cost of sales of 345,000. So the gross profit is 855,000. Minus the expenses of 123,000. So we have the operating income of 732,000. So this operating income will now be our basis to compute the tax, okay, of the sole proprietor. So operating income also means gross compensation income for the computation of tax. So we have 732,000. This business had no other income, so it will be 0. Less allowances approved from BIR, so it will be 0. And then the government contribution. You as a sole proprietor can also use your paying or solely paying your SSS, your own PhilHealth, your own pag-ibig. So you can deduct it as part of your government contribution. So for this example, suppose that you pay 800 to SSS monthly. So 800 multiplied by 12, which is 96. The PhilHealth, you pay 900 times 12, which is 10.8. And pag-ibig is 100 times 12, which is 1.2, or 21,600. Note that this is only an example of the computation. But if you want to have the actual computation, then you need to use the SSS table and the PhilHealth table. But pag-ibig, there is no table for pag-ibig because whatever earnings you have, even if it's low or high income, you still need to pay 100 pesos per monthly contribution. So, for example, you already have the government contribution of 21,600. So, it will be deducted to the total gross compensation income. So, your taxable income now, or the basis of your tax, will be 710,400. So, you need to take a look on the table. So, you have table for BIR. So, the 400,000 is equivalent to 30,000. And then the remaining amount, so 710, 400 minus 400,000. So, the remaining is 310, 400. Wherein the basis is 30% based on the table. So, it is 77,600. So, if you add these two, it is 107,600. So, now, the result is the annual tax. So, you need to divide it by 12 in order to get the monthly tax of 8,966.67. Okay? So, let's be ready for the number 2 example. So, the number 2 sample is 1,200,000 for the sales. For the cost of sales is 345,000. For the expenses is 123,000. So, the problem is silent. So, we need to say it's a corporation. So, this is a merchandising business because it has cost of sales. So, what we're going to do is to deduct the sales minus the cost of sales. So, we have the gross profit. So, 12 minus 345. So, we have 855,000 gross profit minus the given expenses, which is 123,000. So, you deduct these two. So, you will get the operating income of 732,000. As we already discussed, the computation of the income tax for the corporation, we're going to use a 30% tax. So, the basis will be the operating income multiplied by 30%. So, you have 219,600. So, you deduct these two, operating income minus the tax of 219,600. So, you have the net income of 512,400. Okay? So, you check whatever tax is higher, then this one will be, you're going to pay it to the BIR. So, the MCIT of these earnings is 2% of sales, which is 1,200,000 times 2%. It's 24,000. So, you check. So, whatever the higher amount, so it will be the one who will record and pay it to the BIR. So, 209,600 will be the tax. Okay. For the number 3 sample, the sample is revenue of 8 million. The operating expense is 48% of sales. So, this one is a service business because there is no cost of sale. So, revenue is 8 million and it says that the operating expense is 48% of sales. So, you multiply 8 million multiplied by 48%. So, the operating expense is 3,840,000. So, upon deducting these two, you have the operating income of 4,160,000. And to get the tax, you multiply 4,160,000 multiplied by 30%. So, you will have that amount of tax, which is 1,248,000. Yes. So, 4,160,000 minus 1,248 million. So, you have the net income of 2,912,000. Okay? So, there is a net income. So, you're going to pay 1,248,000 to the BIR instead of paying on the MCIT of 160,000. Okay. Let's proceed with the last example. So, last example is given. It is a service income of 4 million. Operating expenses of 1,560,000. So, you just compute 4 million less operating expense of 1,560,000. So, you have the operating income of 2,432,000. You deduct the 30% tax. So, how you will do it? Operating income multiplied by 30%. So, the tax is 729,600. and there is a net income of 1,702,400. So what will you pay to the BIR? Again, this tax or the 729,000 will be paid to the BIR instead of using the MCIT of 80,000 only. So why? If there is a net loss, then that's the time you're going to use the MCIT. Okay? But if it is a gain or a net income, then you're going to use the 35% tax, whatever is higher. Okay? So that's the end of Module 5 on the income tax. So I hope you learned something from this. Bye-bye.